Welcome to StockOdds Odds and End podcast. I'm Dave Singh here with Rob Friesen, getting ready for the week ahead. Good evening, Rob. How's everything?
Not too bad. I was looking at some stuff here getting prepared, and I noticed FinViz is different than some of the other data providers in terms of what it's saying about where the futures are at. So it tells me that the Dow, the S&P, the NASDAQ, the Russell is all up right now, but that's not the case, is it?
No, we're
What do you
actually
have?
down. We're down like 0.25% on some of the other sites. So it looks for a little soft weekend, soft open for tomorrow.
Is that in keeping with what would be expected in seasonality this week? What do you have for
totally. Because
mid-month here?
seasonality is expected to do almost 0.5% negative, so minus 0.48% for the spider for mid-month seasonality, and especially on Friday we have the options expiration minus 0.8%. So this week is the weakest of the entire month of December, and we look back a couple years as well, and there have been some kind of big drops at the same time before.
Okay. We've got a big week for economic numbers as well. So mid-month seasonality is from Tuesday, so that's the 9th, and then through the 14th business day, so it goes over into the next week a little bit, but we also have some big economic reports. Why don't you rattle that off right now?
Yeah, starting on Tuesday, really, we have a significant one, the core CPI at 8:30 a.m. Eastern. So that's going to let us know how inflation is faring. Is it coming down at all, or is it still staying high? And then Wednesday is a very significant day. We have the federal funds rate announcement at 2 p.m. Eastern, and then Jerome Powell is going to be talking afterwards. So that's probably the biggest mover of the week, might be around that. And then Thursday, initial jobless claims and retail sales, and Friday, some manufacturing data. So the themes of the week are going to be how is the economy doing, how's inflation doing, and also what the Fed's stances are going to be. Are they going to remain hawkish, get more hawkish, show signs of a pivot? So this is going to be more macro-driven week than past week.
Right. I had a question from a subscriber about in the seasonality almanac, the relevance of the Monday, Tuesday, Wednesday, Thursday, Friday seasonality. And in my observation over the long sample, they're not as powerful as on just a daily basis like that versus the events of, say, the last trading day of the month or the first trading day of the new month or expiration, which we have at the end of this week. We have a quarterly expiration, so it should be kind of important what symbols are mentioned for the long bias and which are mentioned for the short bias. But that being said, if I was to sort of weight the daily seasonality, Monday, Tuesday, Wednesday, Thursday, Friday, to me, Mondays might be some of the more reliable ones from historically. And if that's the case, then for December here, it says that Mondays are expected to be underperforming, like, what would happen on Tuesday or Wednesdays. Now, you got to contrast that, of course, with our economic CPI numbers on this Tuesday and then FOMC announcement on this Wednesday. So anything can happen from those major drivers, right? Friday's expiration. Thursday, we have, a little bit of unemployment report and some other things. The Fed actually has some manufacturing and utilization numbers on Thursday as well. But so looking at it just from which day of the week might adhere to that daily seasonality, and I think Mondays might be the better weight. All right, so going into how we got here Friday, we had a number of weeks that were actually up weeks, and then last week was a down week for our indices. And the Russell was the worst performing, down 5.01%, right, Dave?
Correct.
Are you there? Okay. Yeah. So Russell performed the worst, and it's the third of the four. It's the third worst for the year. NASDAQ still the worst for the year. But I think there's a reason for that. In one of the list write-ups, I was talking about, tax loss selling, and there's a lot of NASDAQ and also Russell small cap stuff that is down for the year, and people want that tax advantage, and especially if they've had gains elsewhere, so they might unload that. And so the last day of tax loss selling would be, if I look at the calendar here, it would be 2 days before, because you have to settle by the end of the month, right? So it'd be 2 days before the end of the month. So the last day would be probably that people would want to leave it to would be Wednesday, the 28th. That being said, most of it gets done in the first 2 weeks of December, if not 3 weeks of December. And because Christmas falls on the Sunday, we've got pretty much a full week as the third full week of December. So I could see it taking place this week and possibly even into next week, even though there might be a Santa Claus rally consideration too. You never know. But if this week starts off to look pretty bad, or the Fed or the CPI catalysts, add to it, add injury to insult kind of thing, insult to injury, I could see that the tax loss selling increases. Because if you're holding something that you said, oh man, I want to unload this and get the claim for the loss, and you start to see it get worse, wouldn't you be inclined to I got to dump this thing?
Yeah.
So I would say the selling could culminate into Expiration Friday. And then maybe next week could even, the week of before Christmas could even be a rally. It's possible. This kind of reminds me a little bit of 2018. I think the worst week of 2018 ended on the 21st, Friday the 21st. So that would have been the third week of December as well. Whereas this time it might end at the 16th, but nonetheless, 2018 we had a really bad December, and it happened quite rapidly too.
Yeah.
It wouldn't surprise me if this was the case here, and I don't want to scare people. It's just that you have to be ready for both the scenarios and try to think about what would be the fundamental reason why. So why did we have a rally in the weeks before this last week? We had a rally because the expectations of maybe the Fed will go a bit easier. And then we had a bad week because we got some other numbers that kind of talked a little bit more about the Fed maybe still needing to be aggressive, and also recession. And so that can carry over into this week as well, unless we get, again, some numbers that say opposite. But we had that sort of we had a real hopeful rally in October. The Dow had a really great month. We saw some of that hope come through in November for bits and periods. We saw a little bit of a rally as we rolled into December. And then from there, like last week was a bad week. So I'm kind of leaning to seasonality this week being true, as you're pointing out, Dave.
Mm-hmm.
So in that mix, what are some of the favored sectors and the ones that would be softer? What can you see there?
Yeah, for mid-month, the data says to be longer things like the SOX, so chip stocks, the IWM, and biotech, XBI and IBB, while being shorter things like oil, XOP, gold, GDX, XLE, and even the staples, XLP, XLI, and real estate, IYR. So that's what the mid-month is showing. And then for the third Friday, it's showing to be longer silver, gold, biotech, IBB, XPI, and shorter pretty much everything else. Financials, tech, KRE, XLK, XLY, XLU, pretty much everything. Even the ARC funds, QQQ. So that is that day we're expected to have more downside anyways, but just a little bit longer, more defensive things like gold and for some reason, biotech is also a little more bullish for that third Friday. So,
well, I mean, there's a discrepancy there when talking about maybe some further tax loss selling in the small caps, and yet IWM is supposed to perform a little bit better, like actually a bit slightly positive, where the S&P and the NASDAQ is supposed to be negative for the mid-month seasonality. So we have a bit of a discrepancy there. Now, if the SPY and NASDAQ's down significantly, it could pull the IWM down with it, even though the seasonality is slightly better for it. So that's just context, right?
Yep.
Okay. Any other groups that you can see that you didn't mention? Or?
Not on there, but oil is pretty significant, right? We had a huge drop in the past week in oil, and for seasonality, it's expected to be a bit softer too for mid-month and for the third Friday as well. So we have three things lined up. It's come down like 10% the past week, right?
Yeah, the whole energy complex was down 7.35% for the week, right?
Huge week down. And
but in looking at that though, that's interesting because it's kind of an example of mean reversion in process, right? So for the 1 year, like for 2022 relative performance, energy is, even after last week, is still up 33%. So communications is down 37, cyclical is down 33, technology is down 30, real estate's down 23, and energy's still up 33. So when you look at it like that, is there some profit taking in some of these stocks that's starting to contribute to it now? It's different when you look at oil futures and the oil related equities and how they've performed. Don't get them confused. I know that many people, when we hear, oh, oil futures are down, you automatically think that your stocks are down. The stocks have performed really well. I mean, this is an example. What's inside energy? What are the symbols in there? I can bring up the list right now that's listed in that whole group. And let's see, technical here. I'll sort it. Actually, I'll go valuation, sort it by market cap. So you've got Exxon, right? Chevron, Shell, Conoco, BP, EOG, Schlumberger, PBR, Oxy. I mean, these are all stocks in there. What have they done? What's their performance? Year to date, Exxon's up 69%. Chevron, 43%. Shell, 28%. Conoco, 56%. Schlumberger, 56%. Oxy, 115%. MPC, 66%. Do you see my point here? That oil futures have declined substantially from the highs, which were near getting close to 140 a barrel, and we're down 70. So they've been cut in half. But the stocks themselves, they've done something completely different. And we're getting right now a mean reversion in the equities. So we've been in our top 10 list, for example, it curated it for us. We didn't really have a decision in there. It just came spitted out. But it was, short a number of these oil names last couple of days. And so when I thought about it, I thought, well, it's kind of risky when the oil future's down so low. But then I went and looked at the stocks themselves, and they're just coming down from their highs. So Exxon was down 5.75% for the week, which is just a little bit more than for the month so far, because we had 2 days, December 1st and 2nd. But for the year, it's still up 69%. So this is the thing. There's still plenty of room for these equities to have profit taking hit them. And so I'm more comfortable with if the algorithm brings up more of these names.
They've just been so bid up throughout the year that they have a lot of premium to come out. So,
Well, I mean, Oxy, we know Warren Buffett was buying Oxy and stuff like that. I mean, it's up 115% for the year. Are people going to go, well, maybe, some people might say, well, I'm going to hold the bad stuff because it'll come back next year and I'll take profits on my, stuff that has performed. So there's that too. Could take some profits. So it's going to be interesting, but you got to look at that context. What has it done for the year? What are the groups that are up a lot? What are the groups that are down a lot? And this becomes extremely important when we go into January, because a lot of times you get the stuff that really got beat up might spring back in January. And the things that really performed well this year might be sold in January too, So just keep that in mind. But I hope that puts some perspective on it, that, we've had such a divergence in the equities performance in the energy group versus the futures. And when you come into seasonality window, if it says that, XOP and say XLE, if they're showing that they should be soft in the seasonality window, well, what's your starting point? Your starting point in the big picture is still pretty good. But maybe on a weekly, some of it got away from you. I mean, you missed a bunch of profit already from being short because it already ran. Well, is there more to come? Potentially, yes. On a probability basis, I would say probably more to come, right? Anything else?
no, I mean.
I want to talk a little bit about China, because like Web is up 80% since the October low. Now, what happened? What was the October low? So it was October the 24th, I believe. We had Xi, again, dictator for life, basically, right? President for life. He got his second term, and a really obviously strong cabinet and so on. So we had all of the China ETFs and stocks gap down. They got gap down huge. I mean, what it was on average, maybe 15% or more. So that October low, and then from that, these symbols have really rallied. So, you got to kind of look at that context. So even though we had the lockdowns were continuing and cases were still rising, the stocks did have a pretty good comeback tour from that low. And now you're kind of on the fence a little bit after that level of performance, because they are starting to loosen up things. And there's been a lot of protests and things. They even burnt down all their, testing centers and stuff in some areas. It's like, so the unrest, so the restrictions are being relaxed a little bit, but cases are rising. So it wouldn't surprise me if either it's going to continue to be opened up, or it's going to slam the door shut. And if it slammed it shut, I think some of these stocks would reverse course. So just keep that in mind with your China stuff. Okay. And you may want to just not have exposure. Like sometimes when you're doing S&P 500 stocks, they are Chinese companies that are listed on the exchanges, and they can get caught in the, rally or the downdraft. So just keep that in mind. You can screen by country.
Some of these are up 50% on the month.
Yeah, well, I mean, the Queb, which is the internet ETF, is up 80% since the October low, and then that kind of went first, and it's a little bit of a safer bet when you look at the ETFs to get into on a rally than going in stock picking. But once the ETFs sort of gain some traction, then some of the stocks say me too, and then they rally, and they rally late, and they rally strong, and we definitely saw that this last week. So and that's the difference. Look at how China's performed for the week versus how the S&P and NASDAQ and Russell did for the week. A tale of two different things, right?
Yeah.
So anyway, I think we'll wrap it up with that. Hope that helps a little bit.
All right. Good luck.
All All right. Thanks, Dave.
Thanks. Bye-bye.